Hello. Rather than just do another silent chart, I've received a lot of messages of people asking me why they are silent, and that is because making videos takes a lot of work and a lot of time, and we already have a free Discord where we're posting in constantly and have a free AMA section, Ask Me Anything, where we will take a look at and chart whatever people are looking at and what I'm looking at. That is every day at 8 p.m. U.S. Central. If you are looking for narration or details, that is the place to find it. The link to our Discord is in the description below. And I just figured that we would just go through this chart together. So we're looking at a daily chart of IMX. You can see a very clear swing high and a very clear swing low. It appears to be making a kind of makeshift reverse head and shoulders pattern. This range does have a slightly concerning shape to it, where it could be possibly making a diamond shaped top. So a person needs to be aware of that. Nothing in these videos should be taken as financial advice. When it comes to finance and money, at the end of the day, the king owns the cattle on 1,000 hills, so I could really care less. But I am interested in the patterns that develop on these charts, the ratios that they tend to retrace and expand and contract by, because I find that all things in existence do the same thing. And this is more of just an exercise of how it applies to financial markets. So looking at this macro chart, we can see that we are starting to have a bit of a breakout. Here's our left shoulder, our right shoulder. These white squares are an average range. If we were to grab one of these and pull it over here, we can see it's the average range. It's the average range, the average range, and the average range, the average range. And if we start building these on top of each other, there's 2 ranges, 3 ranges, 4 ranges, 5 ranges, 5.5. And when it hits a half a range and fails to retest and hold the bottom of it, well, that is a clear reversal signal, which is why when we're looking at this large leg down, we're looking for a retrace of this. And for values over here, you will notice quickly that this is the Fibonacci retracement tool, but I'm actually not using the traditional Fibonacci values. I don't find anything wrong with them. I find them to be averages of the numbers that I have on the screen, which are ratios of numbers that I find in the King James Bible. A person doesn't have to be a Christian or even believe in a creator God to understand that there are natural laws, and the Bible does record them with extreme accuracy. I choose to believe every word of it, but on that matter, to each their own. These methods have been found to work, and we will see moving forward how a lot of times these actually play out. So here we can see that if we were to double this range, we're looking for price to break halfway up into this range and then pull halfway back into this range, head up to the top of this range, pull halfway back to the middle of it, rise to halfway through this range, but this time fail to hold the bottom of this range, and looking for price to make it up here and then make a much larger retrace where we would take from here to here if this ends up being the top, and we would be looking for approximately a 50% 44.1 retrace. So I expect price to come up halfway into this range, which also correlates with this high, pull back to the bottom of the range, and then break up to the top of the range, but only come in a quarter to 50% of the way into this range, and then pull back and hold the bottom or at about the 3/4 mark of this lower range. If it hits this target and pulls halfway back into this range, and or any more than halfway back into this range, I would expect it to be a reversal, and our price action would begin to look like a giant bear flag. And then we would expect another leg down, and a lot of those things comes up to the market. While these charts are decent and in order, I mean, like the Bible says that all things are decent and orderly, even though they look chaotic. They are very structured. There is perfect order. Predicting price is not something that's possible. All we can do is we can say what is possible by taking the past. The Bible says what has been shall be, and that there's nothing new under the sun, that there's a time and a season for all things. There's a time to sow and a time to reap, and all we can really do is build these out as to what is possible using the past data, how much money people have. The chart is the final culmination of all buying and selling decisions of every buyer and every seller in the entire world. So what they have, what they can do, what they want to do, and what they will do is on this chart. And you can see that the general public has chosen this percentage range. Now this is a logarithmic chart, so I mean we still have time on the bottom and price on the right, but the display of our candles or our line is showing us the moves in relationship to its change in percentage of value and not its change in dollar amount. Nobody cares if a $1 asset goes up by, or let's say a $100 asset goes up by $1. I mean, that's a 1% increase. It's nothing. But people do care if a $1 asset goes up by $1 because that is a 100% increase. And it is the change in percentage that drives the buying and selling decisions and the emotions thereof. So looking at this, if price was to come below here, we would be looking at some kind of a reversal pattern, which is kind of what we were looking at here, kind of expecting to come down and maybe make a double bottom, which may very likely still occur. All we can really do is take temperature checks on it, and looking at it, we can even see that there was a past trend, that it is coming up to retest and possibly reject, maybe range just a smidge and then come down. Now, if Bitcoin and Ethereum and the larger market decides that it's going to rotate to the upside, which it very well may, we would expect this to break halfway up into the range, pull back to the bottom, and then come up to the top of the range, break into the range above it just a smidge, and reject. Come back down for some more fuel, and then come back up. But we will need to break above this line right here. So currently, I am not exactly bullish, but I'm also not extremely bearish. I'm sitting in the neutral category with my bet slightly to the downside, just because the macro environment of Bitcoin and Ethereum does look slightly bearish. So I just figured I'd do a short, just a very short narration of this chart, how it's built, why it's built. You can also go to our trading view and go to crypto file 622, and or else you can click the link in the description to port this chart into your own trading view. And just for an example of how that's done, if you click the link that will be in the bottom of the video, it will open this trading view idea, and you'll see all these trading view ideas in our account. The reason I use these is because you can go back and you can press the play button. Now this one was just launched today, so there's not any new data to play, but if you scroll down to the share button. And you click share, you can click this make it mine, and you can port this exact chart into your own trading view with all the data that is on it. Now, where price goes from here, well, it's either going to reject here, and we're going to head back down and possibly bounce here on the 9th of August, or it's going to break above and come to 50% of the range, pull back to the bottom, go to the top of the range, and hopefully break slightly into the one above it and pull back to 50%, and hopefully we've hit this target by August 9th. If not, we will most likely be at this target on August 9th, where a person would have a buying opportunity. Now, I don't degen leverage trade this stuff with high leverage, because anybody with $1,000 in their pocket can push the price on a lot of these assets just by simply using leverage and form a new trend to the upside or downside or what have you. And it is very easy for larger holders to hunt stop losses, and when you're using leverage, you have to have stop losses that are quite tight. Before we hop off here, I want to dig in just a smidge more, and we'll go down to the hourly and just take a good look at the exact current price action. Just looking at this leg right here, we have a clear, obvious uptrend that we would expect to hold. It's got a couple tiers to it. If this uptrend was to break and retest the bottom of it and again reject, we would be expecting a full expansion of this range right here for a nice smooth ABC pattern. This is the range. This was the retrace, and we would be looking at a price target of 68.50. And that's if we lose this trend. This is the obvious trend right here, but you can see this line here is perfectly parallel to this, so it would not be surprising to me to come down and take the liquidity below the low when everybody's wrecked, then rotate to the upside. As price drops, and if we see a drop in Ethereum and Bitcoin, we would expect all of these altcoins to do the same and come down pretty heavy. And being that they may still be bullish, buyers may have orders set here, and the way that we know that is because, or is when price gets there, it actually will turn around and actually will bounce. If a person was to be leverage trading, I mean, you have to have a tight stop loss. I mean, certainly no more than below these lows. And you would be looking at a retrace of this leg right here, this nice swing high to swing low. We'll grab our Fibonacci retracement tool, and being we're looking for price to go to the upside, we want the numbers going up. You don't need to use my special values, but I use 88.1, which is 88.1% retrace of this move. I use 0.7, which is a 70% retrace of it. I use 62.5, 59, 50, 44.1, and the 236. So we would be looking for price for a leverage trade to come up to the 0.441 at about 77.23. And for a stop loss and validation area, personally I don't approve of high leverage trading on these, because it's very easy for you to be directionally correct and have the right answer, but still lose money by using high leverage and getting stopped out. So you can make a note that trading is extremely hard, even when you have the right answer, because your thoughts and emotions come into it, and the ability to make insane gains is real. But the inverse of that is equally correct. The ability to lose insane amounts is just as much equally valid as it is that you can make it. And it is far better to be more conservative, use lower leverage to no leverage, and make consistent gains over time. But to each their own. I don't give financial advice as to exactly what's going to happen with price. This is a model of what can and could happen based off of past buying and selling decisions. Now, if you like what you've seen, I may make these videos once a day. I may make them once a week. I may make them never. I have no desire to promote some large YouTube channel, but I do have a Discord, and all are welcome to come in. It is free for the time being and will probably remain that way unless a mass amount of users come, and there needs to be some kind of a paywall to prevent trolls and gainsayers from just providing constant interruption, and also the amount of time that would need to be spent to answer people's questions and chart different things would be far more significant than 1 to 2 hours that we're currently doing at 8 p.m. Central, which would require some type of reimbursement. But you're welcome to come into our Discord. The description, or the link, is in the description. If you want to port this chart into your trading view, just follow the instructions I gave, and we will see you soon.